Newman. Substituting tonight, Sophie Louis.
Hi, and thanks for joining us. Let's call it what it is, Black Monday. Because when the TSX nosedives more than 600 points in a matter of hours, any other shade or color just doesn't cut it. And calling it simply Black Monday may not cut it either. The 3-month TSX chart casts a dark cloud of nearly 2,500 points shed. It means most Canadians are suddenly worth less, and so are millions around the world. Global markets tanked today, too, linked to one fear, that the U.S. has now entered a recession. Loren McNabb is at the TSX for us today. Loren?
Well, Sophie, it took just 3 minutes for the Toronto Stock Exchange to plummet 500 points this morning, and the free fall continued long after that. Analysts say this is sort of a culture of panic, where investors are simply ignoring the good news, focusing on the bad. Well, they got plenty of it today. There are a lot of reasons why British researchers officially named January 21st the most depressing of the year. They've done the math and determined by now your New Year's resolutions have failed, your Christmas card bills are in, and the weather, it has you downright blue. But even the experts couldn't have imagined negative numbers contributing to a Monday like this. $70 billion lost on the Toronto Stock Exchange, billions more around the world, a shockingly sharp global sell-off that had almost everyone saying,
wow. I never anticipated a 5% drop in the TSX.
After all, it took a 6.6% nosedive just last week. Today, there was technically nothing new for traders and investors to absorb that they didn't know Friday, the day the U.S. president announced a $145 billion plan to stimulate that country's sagging economy.
Additional action is needed.
The problem is George Bush didn't make those comments until after the European and Asian markets had closed. So this was their first time to react. Asian markets giving the plan a thumbs down with drops of 5%. Europe seeing its worst one-day losses since 9/11.
I think you'd see even worse numbers if we had the U.S. traders in on it all.
They were off for Martin Luther King Day, but fears of an American recession leaking across the border into Canada, potentially around the world, are clear.
The key is, do people believe this will be a relatively temporary impact upon the economy and we'll be out of it in 6 or 9 months, or are we going into a more profound 1930s style scenario?
We haven't been down this particular road for 70 years.
A path that can keep Canadians from spending and further slow down the economy. Mutual funds, RRSPs, are all tied into the market. Today, millions are hurting and hoping.
It'll improve. It's just going to take a while, and I hope it's soon, and I'm glad I'm not about to retire.
At 25, Kevin Mack is a long way from retirement, but for the first time, lessons learned at this university trading lab are finally hitting home. He lost close to $10,000 over the past couple of weeks.
A lot of people, they're just kind of standing there saying, I've never experienced something like this before, and should I be holding? Can I afford to hold? Can I afford to sell?
You know, many advisors are still repeating the line that now is actually a good time to buy. Canadians still might not feel like opening their wallets just yet, though. Take a look at the price of something like oil. It traditionally cushions this economy. Well, after hitting a high of $100 U.S. per barrel just a few weeks ago, even it is down $10. Everyone hoping those arrows turn around. Sophie.
Thanks, Loren. Loren McNabb at the TSX for us tonight. And joining us now from the TSX is Patty Croft from the investment firm Phillips Hager and North. Patty, thanks for joining us. $70 billion wiped out on the Canadian markets today. All of last year's gains erased. Patty, is there any real doubt we're in trouble here?
Well, there's one way to describe today, and that is it was ugly. And indeed, what we saw in terms of the market, there's an old saying, it's all about fear and greed. And today we were towards the fear end of the spectrum as we saw almost indiscriminate selling of stocks everywhere around the world. And it's all about the U.S. economy and growing concerns in that regard.
Well, U.S. markets were closed today for Martin Luther King Day. Can we expect losses to continue piling up, though, tomorrow when they're back to business?
Unfortunately, at least at the start of the day, Sophie, because the futures market gives us an indication of what to expect. The futures market is showing that the U.S. will experience a similar type of losses that we saw in major markets all around the world. But hopefully we'll get some sign of reprieve as well. At some point, people are going to say, wow, what a bargain. It's not the end of the world. So amidst all this fear, there's opportunity for long-term investors as well.
And tomorrow, Patty, the Bank of Canada is expected to lower interest rates, but there is speculation the big banks may not follow. That would be somewhat unusual. So why would they not follow, and what would be the impact of that?
It would be unusual, but it's probably exactly what's going to happen. Ordinarily, the banks don't follow the Bank of Canada's lead in an environment of economic economic uncertainty, and that's exactly where we find ourselves today. The reality is, for most banks, their cost of funding has increased significantly in the midst of this global liquidity crisis, so indeed they're not likely to follow the bank. So what are the implications of all that? The reality is not many people borrow at the prime lending rate, but it may mean the Bank of Canada will have to be a little more aggressive in lowering interest rates down the road if Canada gets into economic difficulty, because the banks are going to drag their feet.
Patty, thanks for joining us today.
People are wondering if we've actually hit the bottom yet. The answer to that depends on who you talk to. Some analysts feel we could see another major slide tomorrow when the U.S. markets reopen. Others feel, though, that we could actually see significant gains in the commodities that took the biggest hits, things like oil. Either way, there's no sign of panic selling, and the feeling is that certainly nobody has lost complete confidence in the market yet, which would be the sign of much deeper problems. Carolyn?
All right, Jackson Prosco at the TSX tonight. Thank you.